I had a shocking revelation this morning about interest rates, which I'll tell you about in a couple of minutes. Tesla stock is being punished because Tesla is being smart about keeping production high as they increase capacity. They have challenging headwinds in interest rates and competition of a sort. Okay, this is Randy Kirk. If you like the morning show, hit like. There's not a lot of news today, but I'll talk more about the overall general issues with regard to the macro and whatnot. And then later today, I'm pretty sure I'm going to be having Brian Wang on today. If not, it'll be tomorrow in the midday for sure, but maybe later today. We're going to be looking at China, Hong Kong, and Taiwan. Will there be a war? What if there is? What would that do? And in the meantime, what are the real trading issues? What are the real economic issues in China? And what should we be looking at that part of the world in terms of the India, in terms of South China, all the manufacturing capacity now starting to leave or at least spread out beyond China? Very interesting subject matter, and Brian and I will be getting into this in depth. We both have a lot of experience in that part of the world. All right. The market is starting out pretty much sideways this morning. The Dow was up a little and the NASDAQ down a little, and not sure exactly how things are going to go this morning, but Tesla is down because they're cutting the price on the S and X in China. Well, that's the headline reason. Really? Do you know how few S's and X's Tesla sells in China? They already cut the price of the S and the X based on a modified mileage in the US yesterday. So why is this affecting the stock this morning? I don't think it is. I'm not sure why it's going down. Well, we'll talk about a couple of possible reasons. I think it's really that the narrative is completely broken again. The market narrative is completely broken. The Tesla narrative is now broken. And both of those are going to need news to change the story. There's not any news today, probably not any news tomorrow, probably not any news Friday. We're probably looking at this sideways look, and maybe Tesla is going to test 217 again. So for those of you who are wondering where I think it could go, that's where I think it could go. I don't think it will go to 217, but it could. I don't think it'll break below 217, but it could. Remember, we went up from 100 to 300, so a drop back to 200 would not be a crazy drop. It would be a bear market on Tesla, but it wouldn't be a crazy drop. On the other side, I don't think that's going to happen. But then I probably didn't think, I didn't think it would get here, even though I did say it could. All right. The fundamentals are actually strengthening for the economy with excellent retail numbers and with increasing GDP estimates. One Fed estimate came out yesterday putting the GDP for the third quarter at 5%. I don't think that's going to be true, but there was an earlier one at 3.5. So that's strength. So those fundamentals are very strong. Trueflation says that we are at 2.44 inflation year over year, and that seems pretty steady. It's been in that range now for over a month. And so 2.5, I don't think the Fed would ever increase interest rates again if we stayed at 2.5 forever. Tesla fundamentals are still the same. Future of 50% revenue increases and increasing margins. Let that sink in. Tesla has not changed their expectations. They have not changed their statements. They're saying they're going to increase sales 50% per year for the foreseeable future, just in automotive. That doesn't even count all the other things they're doing. And margins, according to almost anybody you ask, have bottomed out in the second quarter and are probably increasing right now as we speak because of lowered costs of commodities, lowered costs of production, lowered unit costs because of overhead as a percentage being less. So I'm sorry, don't know what to tell you. So let me talk to you about my revelation. My revelation was this morning that anybody that's under 45 years old today, right now, anybody that's under 45, 20 years ago was only 25 and probably hadn't really been thinking very much about interest rates at all. And so that entire cadre, people that are 25 now, under 25, anybody that's under 45 years of age right this minute has never experienced interest rates this high. Think about that for a minute. 45, it's been 21 years since we've had mortgage rates at the current levels. So while I think, and lots of other people think, that these rates will start coming down within 6 to 12 months, they are still shocking, especially to that group under 45. So most 25-year-olds are not paying much attention. I'm sorry, I got a little confused there. I'm very, very sorry. The reality is the country can live with these rates. A 4% 10-year bond is normal over history. Cars and mortgages at 6% or so are normal over history. What isn't normal is a real rate of interest at almost 2%. And that's the worrisome part. That's the one to watch. That's why when we look at bonds sitting at 4.25, and I say if they go over 4.5, that is really a problem, because that would mean real rates are well over 2%. So look at my video last night where I ran about the Fed and the federal government spending orgy. I'll put a card here or later, I'm not sure. Anyway, there'll be a card. Hey, Tesla has won a bunch of bids for charging stations that the government is spending your tax dollars on and didn't need to. A complete waste of money that they're paying billions of dollars to put lots more charging stations out there when Tesla was doing a fine job of establishing chargers. And in fact, other companies were doing a fine job also of putting chargers out there, even though they don't work. And when they do work, they're slow anyway. But Tesla won these bids. They won these bids not by 10%, not by 25%, not by 50%. They won them by 66%. In other words, other people were bidding $1. Tesla was bidding 33 cents. Well, okay, so does that mean that Tesla therefore won 100% of the bids? Oh, no. Your government created a policy that guarantees that the low bidder can only get a maximum of 25% of the work, no matter what the other people bid. So you and I will pay triple for 3/4 of the units that are installed. This all makes perfect sense to me. Bad idea to have the incentive in the first place, and worse idea to have a 25% cap on the low bidder. I don't know what to say. But of course, it shows once again that Tesla is the most amazing manufacturing company in the world when they're bidding 33%, at 33% of the next bid. Well, the Fed minutes are coming out later today, and the market is apparently going to hold its breath until those are produced. It's rare, but possible that we would learn something in those minutes that we don't already know. Not very likely to happen. But you know what? The market is so skittish right now that small negative things in those Fed minutes could cause another slide. We're sitting at some technical levels with regard to the S&P that, if we go much further down that rabbit hole, we could end up into a bear market with regard, or at least a correction and heading towards a bear. Well, someone asked me whether I think there's still more trimming coming in the stock market, and for Tesla, the next 6 months are very, very tricky. August is the slowest month of the year. People are on vacation, etc. I've mentioned that a few times. But September is the worst month of the year when it comes to the market pricing. So that does not bode well for stocks over this 6-month period. There's also another tricky thing, which a couple of people are reporting on, which is that right now, today, this is when the market commonly switches direction. So if we're going to switch direction, I guess that would be back into the bull leg. Certainly, Bank of America is saying we should be in the next bull leg. Other people are talking about the fact that maybe the stock market has gone a little too far on this downward slope over the news that has come out, especially with all the fundamentals being so good. And then Tesla has all these catalysts coming, the Cybertruck and Highland in particular, that we know will be significant catalysts. So we'll see what happens if there's some really more solid news. I would have thought the retail news this week would have been good. Target's news, well, they were up a bit after a miss with bad guidance. But their miss with bad guidance was not as bad as many has suspected after Target has been michelobed over offensive trans displays earlier this year. Yeah, in fact, I know people that are never going to step foot in a Target again after that horrible display. My gut says that the market has fallen enough to create some bargain hunting right now, but is raw from the Fitch and the Moody haymakers. I'm also beginning to think that there's a pall over the investment community regarding the upcoming elections. I'll leave it to you to contemplate the details, but I suspect most investors are not excited about either of the two leading contenders. And they both have worrisome legal issues that they're facing right now. And there's no bench at all for the Democrats. So I think that would be a little bit, as we get to the end of this year and the elections become more and more of an issue, I think that could also be a kind of a downward pressure on folks' attitudes about everything. Apple and Tesla, listen to this. Are you ready for this? Apple and Tesla are the most under-owned stocks by institutions, according to their weight. This is Gary Black reporting. Well, there's no surprise about Tesla. We would have all guessed that, but why Apple? These two companies together are the highest ROI, return on invested capital companies in the world. Return on assets are massive. They have almost no debt, amazing amounts of money in cash. They're prepared for a recession. They're prepared for whatever comes their way. High margins, execution on both of them. Why in the world are they so under-owned? Oh, there have, on another subject, there have been a lot of Cybertruck sightings the last couple of days. There seems to be a lot of Cybertrucks now around being transported here and there. One of them even had some kind of a sign on the side that indicated maybe it had passed some kind of a crash test or was going to have crash testing. Not really sure what that was all about. Anyway, I'll put the card up here about my rant last night. It might have sounded like I was still ranting today, and maybe I am. This is a tough market. I'm just going to sit. I haven't sold a nickel's worth. I'm not going to sell a nickel's worth. I'll take the hits because I am 1,000%, no, 99.5% convinced that a year from now, I'll be looking at this little period and laughing and being really, really happy with our pension fund being where it is at that point. All right, now make sure that you join Brian Wang and me later today, we're going to be talking about China. We're going to talk about China in ways you probably haven't heard China talked about. Brian has a very big history. He was born in Hong Kong. He's got family in Hong Kong, China, and Taiwan. He's lived in Taiwan. He's got business. His family has business there in all three countries. He has a lot of knowledge about there. I have been trading in Taiwan and China for 40 plus, let's just say 40 plus years, 40 plus years. Anyway, since before Nick, no, actually my partner was trading there before Nixon. My ex-partner, when we had our manufacturing business, was trading there before Nixon. And then we were trading there the entire time from the 70s on. So know the territory well. And we're even going to talk about war today. That'd be interesting. What happens if China does try to invade Taiwan? You might be interested to hear some of Brian's analysis from a scientific standpoint and from a historical standpoint about what might happen to China if they actually tried this. Anyway, so hit like, hit subscribe, hit notify if you want to be notified about that later today. And then tonight we'll do the midweeks. We'll take a look back and analyze things as they stand at the midweek. That'll be later on this afternoon. And then let me mention the Brian thing, that might not be until tomorrow. Finally, join Patreon. We could use Patreon, folks. Come on now. If you're getting $5 a month worth of value, could you jump up there and hit Patreon and contribute to the effort? This is Randy Kirk. I have enjoyed talking to you today.